All right. So once again, we are welcome, even as we continue our learning into the Forex markets. So before we proceed to our next, topic, which is this that we have here, I just want to reiterate some things about some of the things I've said earlier, which is you want to practice many of these things, until you understand them, until you know what they means, until you know how they play out. And one of the things I want to talk about is this spread of a thing, for example. So you also want to be an inquisitive person. You want to be someone who also goes into the charts and follow everything I've said, like open a normal spread account, go to the 1 minute time frame, for example, place a random buy, place a random sell, observe what happens when you place the buy, observe what happens when you place the sell, observe how the market had to move before your position got into profit or loss. Do you get what I'm trying to say? So basically, that's the way it works. That's the way it works. Trust me. Nothing much, nothing. So that's the practice we have to put in. So I just think I needed to say that, before we then make progress into our next class. So let me take this off. And then what do we have next? When to trade the Forex markets. When you read on Baby Pips, or as you must have heard people say, maybe again and again, stuff like, oh, the Forex industry is the only industry where you can, work without a boss. What else did they say again? You don't need to have a boss to make money. This is your way to financial freedom, this and that. You can trade. It's a market that is always open, 24 hours. Yeah, that's true. The market is always open 24 hours. But the fact that the market is always open 24 hours, like I know you must have read on Baby Pips, does not mean that you have to trade within the 24 hours. Does not even mean that anytime within the 24-hour is okay for you to trade. Because as far as the Forex market is concerned, there's what we call liquidity, volume in the market. Take, for example, what I'm trying to share to you is, okay, look at this kind of candlestick now. Let me go to 1 hour so that maybe we can have more of it. All right, awesome. We'll take all this bearish candle, for example. Look at this one. Can you see how long it is? Can you see how long these candles are? Can you see how long these candles are? Inside those candles, the fact that they are long means that they have larger pips, means that whether you were buying or selling, like inside this kind of candles, it means that the market moved at a very large distance. Look at all these candles that I have circled. Now compare them to this one over here. And which other one? This one's over here. Can you see that there's a difference? So what I'm trying to say, or what the lesson that this part focuses on, is that even when it comes to trading the market, the fact that the market is always open 247 does not mean that you should trade the market all the time. Because as a Forex trader, one of the things you want to do is, take a trade, and within the next 4 hours, 8 hours, the trade has gone to your TP. And we are saying that there are times that those things happen in the Forex market. Now, we have what we call trading sessions in the Forex market. And when it comes to trading session, there could be five, but there are three major sessions that we focus on. And that's what we just need to talk about, which is the Asian session, the London session, and then the New York session. Why are they important? They are also important because many of the people that move the markets, these are the regions where they stay. Like when we check, um, let's check how best can we frame this question. Which region? has the largest financial liquidity in Forex. Awesome. Can you see the United States has the largest and most liquid financial markets in the world? And where is the what of all these three, which one can be found in the United States? That's New York. You get what I'm trying to say? That's where we have the New York Stock Exchange. That's where we have Wall Street and all those things. What I'm trying to drive at with this lesson, which you must have seen on Baby Pips already, is these are the sessions where, because after the New York Stock Exchange, I think the second largest is the London Stock Exchange, which still has to do with the financial market and then the foreign exchange itself, and then followed by Asia. So as a trader, you only want to pay attention to these three sessions. Now, the thing about these three sessions also is that, New York as a region has its own currency, which is what? US dollar. London as a region has its own currency, which is what? The pounds. And then the Asian session also have their own currency, which is what? The Japanese yen and the Chinese yuan. I've never traded that one before. When we talk about Asia, we're also mostly talking about the Japanese yen. What I'm trying to drive at is that when you look at these sessions also, you want to focus on trading the currency of those regions. Now, this session, how are they? They are just like the normal 8 to 5. Because traders over there, it's like a normal job. It's in Nigeria that when you are a trader, they think you're either a scammer or a fraudster or something. But we are saying over there in the UK, in America, trading is like a normal day job that you wake up, resume the office by 5 and by 8 p.m. rather, and then close by 5. So all these trading session now, which is Asia, London, and New York, they have their own opening and closing period, as you must have seen on Baby Pips. So to translate their time to Nigeria is very simple. Baby Pips time converter. Baby Pips Forex hours. This is it. It's very simple. Yeah, of course, you will see different people maybe trying to do different kind of calculation, but if you can get it on Baby Pips, why do you have to stress yourself? You get wherever your region is, trust me, just set it. And by default, it will bring the time that those sessions trade in your region. So for someone like me who trade GBP USD, what that means is that I only want to be interested in the London session and New York session. And if you go to your charts and observe, so I'm in Lagos, let's leave it there. This is London session. London session opens at 9 a.m. Nigerian time and closes at 6 p.m. Nigerian time. And then New York session opens at 2 p.m. Nigerian time and closes at 11 p.m. Nigerian time. However, the fact that it closes at 11 p.m. does not necessarily mean that I want to be trading by 11 p.m. The implication of this simple thing, since I trade mostly GBP USD and Euro USD, is that when you go and check the GBP USD charts, most of the volume movements, you will observe that they often occur between 9 a.m. and 11 p.m. Also, my trading view is set to Nigerian time. Like this is currently the time in Nigeria, 10:59 p.m. You can see it over there. So let's first check the daily time frame. Let's pick like 5 candles. That's Thursday, Friday, Monday, Tuesday, and Wednesday. That's today. So let me reiterate this, which we must have seen on Baby Pips before. The Forex market is only open for 24 hours, 5 days a week, which is Monday, Tuesday, Wednesday, Thursday, and Friday. So the market opens on Monday and then closes by Friday. Can you see that we now have a new day? A new day candle has opened. because the global Forex market opens at 11 p.m. So since we've gotten to 11 p.m., you can see that yesterday has closed and now another one is opened. But now that it is opened, it is also opening into the end of London session, because if you go and check it now, no, not London, New York, please. What's the time in New York right now? It should be 5 p.m. Can you see? So is it making sense? Meaning that traders in New York are just closing from the office now. So New York session has ended. When you go and check the Forex charts now, you begin to observe low volatility in the markets. Like I said, we've picked 5 days that we want to use, for example, here. So let us check. London opens by 9 a.m. and then New York by 2 p.m. So can you see? Can you see that the moment it got to 9 a.m., this is 9 a.m. here, that was when we began to have the big volume candles. But what happened between, 3 p.m. the previous day or even 7 p.m.? You can see those small, 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 tiny candles. But the moment we got to 9 a.m., the open of London session on Thursday, look at those voluminous movements to the downside. And then what day was this? This was Friday. Friday was generally a day that dragged. And then look at Monday again. The moment we got to 8 a.m., 8 a.m. is what we call pre-London. Can you see those volume candles? So what I'm trying to say is that as a trader also, what you want to target actually primarily are all these volume movements, because that's where the money is. And we are saying that there are sessions you can catch them, which is mostly London and New York. However, the Asian session, since the GBP and USD is not for that region, this asset is usually slow. But when you go and check assets that has to do with the Asian peers like JPY, you also observe that during Asian session, those assets are often moving. Meaning that as a trader, one of the things you want to do as you are growing is to focus on the assets you want to trade. Now, when you focus on the assets you want to trade, you want to know the time zone that they move best, and then you can position yourself to be ready to trade at those moments. So primarily as a trader now, I don't do anything in the midnight because that's mostly the Asian session. And I don't trade JPYPS. Even if I will do them, I still do them during the day, because most times some JPYPS are also still paired with USD, which is New York, or GBP, which is London. However, they have most of their moves sometimes in the midnight during their session, because that is what they spend in Asia, the Japanese yen. I believe it's making sense. So the fact that the market is always opened 245 is not, this one is not 247. The fact that the market is always open 245 does not mean that it is fit to trade at any time of the day. So take, for example, if I'm taking a trade since yesterday and the trade did not hit my TP before the end of today, and the trade did not hit my TP before the end of today, as we are entering the Asian session, one thing I may most likely do is to do what? To close my trade, or is to close my trade, excuse me, or drag my stop loss to break even. It's as simple as that, because anything can happen and the market will just move slowly until the next day. So that's about that. So once again, to know what time zone, what time the session is you can see we have like 4 here. We have Sydney, Tokyo, London, and New York. But trust me, primarily as a trader, what wants to concern you the most is this Tokyo, London, and New York. And that's usually because this Sydney also is consumed inside the rest. You get it? So let us move to the next topic. And this is where trading is beginning to become trading, Forex analysis. Because this is where you now know whether you want to buy or you want to sell. Because take, for example, when you look at the charts and you feel like, this currency should go down, what do? You sell. When you look at the chart and you feel like, okay, this currency should go up, what do? You buy. Take, for example, I was just checking this charts and okay, I've closed my WhatsApp on the system. I would have shared a screenshot that I took when I placed this thing here. This candle had not gotten here yet. So what I was expecting was that I wanted the price to, get to a point here, this point, and then come down. What that means is that what we are here to do primarily at the end of the day is to be able to look at these markets that, from what I'm seeing, from year to year, the market should go down. What do? I sell. From year to year, the market should go up. What do? I buy. That's what we do in the Forex markets. Market analysis. And that's the part we have gotten to. Every other thing that we've been learning before now is to understand the environment of the markets, how to be able to put your analysis to use. Because if you analyze and you don't know how to set a trade on MT4, what then is the essence of the analysis? If you analyze and you don't know how spread affects your trade, you can be very frustrated. If you also analyze and maybe the trade does not go well in your in the midnight, and then you see it moving during the day, you may wonder what's going on. It's as simple as the time zone is affecting what you are trading. You get what I'm trying to say? So we have gotten to a very interesting part, and you want to buckle up as you ride on. So how many types of analysis do we have in the Forex market? Basically, we have three types of analysis in the Forex industry. We have technical, we have fundamental, and then we have sentimental. We have technical, fundamental, and sentimental. As usual, let us consult our friend. What is technical analysis in Forex? Technical analysis studies the price of an asset, such as a Forex pair, using historical price charts and market statistics. This grammar big. Technical analysis in Forex is a method of analyzing price charts to identify trading opportunities. Here are some tips, trend, support, blah, blah, blah. Long story short, technical analysis simply means that looking at these charts as it is naked, just like they said, looking at price charts to identify trading opportunity. It is to you that all of these things might look like zigzag and jargons. But as soon as you learn technical analysis now, it will make sense. You get. So technical analysis is simply looking at the charts with your naked eye and then with some tools, be able to analyze that, okay, from the look of things, the market should do this or it should do that. I hope I'm making sense to us. So basically, that's technical analysis. Technical, looking at the charts technically, and then making an analysis as to where a price should move towards on the charts. That is what technical analysis is. The next type of analysis that we have is fundamental. So fundamental, let us check also. Okay, so fundamental analysis in Forex is a method of evaluating a currency pair price by examining economic, political, and social factors that may impact it. That's big grammar. Now let's bring it down to our level. What that simply means, if you can remember from the beginning, I said that everything you are seeing on this chart, just as we use the Naira and dollar as a very perfect example, is a graphical representation of what is happening between the two currencies that we are trading. We saw how USD to 1 Naira is currently 1.5, and we saw it on the chart too that it is 1.5. So fundamental analysis simply means that Since these two assets represent both London and US economy, fundamental analysis is simply looking at the economy in itself to then deduce a direction that the currency should go. Let me bring that home and make it clear again. So take, for example, this is London, this is GBP and USD. Let's say, for example, a new product comes out in America and people in London need to order for that product. What will happen? It means that they will have to sell their dollar to, they will have to sell their pounds rather, convert it to dollar so that they can get that product from the US. That's good news for US. That means that the US dollar will gain strength against the pounds. And what will happen to the pounds? The pounds will drop. I hope you are following what I'm trying to say and you are understanding. So what fundamental analysis just simply means is that we look into the economy of those currency, the economy of their country, and see if anything is going on that may cause the currency to be strong or weak, and then we make trading decisions based off of them. One of the easiest example I often use is during COVID. During COVID, almost every economy was in shambles. So let us check USD JPY, for example. And then let's go to the monthly time frame. This is 3 months. Let's start from 12 months first. No, 12. Beautiful. Now let's look for 2020. Amazing. You know, COVID-19 started from December and then lasted all through 2020. Good. So when we come to the monthly time frame, that means we have 12 monthly time frame inside one yearly time frame. Can you see what happened to USD JPY? All through 2020, it was selling. Why? Because the world economy was in disarray. Do you get it? Almost every currency lost its power, including the US dollar. So fundamental analysis is looking at economic events, like it was said here, examining economic, political, and social factors that may impact the currency, and then you make trading decisions of them. So I'm saying why there are some of us that can come on the chart, because let me put it this way, the most popular form of analysis in Forex markets is technical. That's why you see most people, bringing out their charts, using it to predict the move, because technical analysis is the most popular. And at the end of the day, actually, there is a way technical and fundamental aligns together. Meaning that in a way, trust me, once you've mastered technical analysis, fundamental also will favor you. That's the truth. Now, are we saying you should not learn fundamental? That's not what we are saying. But we are saying that once you've learned technical, you've learned a lot. When you now learn fundamental, it will now add more to what you are doing. So primarily for me, myself, I trade pure technical analysis. I don't do fundamentals yet. But that does not mean I don't pay attention to news, because in the market, there's what we call news and news trading. What that means is that there are certain hours of the markets that news often come out at certain times of the day. And the thing about those hours of the day is that there is usually crazy volatility in the markets. I'm sure you must have seen that on baby pips. I'm saying volatility that may not respect your stop loss, that may not respect your take profits. Of course, if you violate your take profits, it's to your advantage. But when it comes to your stop loss too, it can violate it in a terrible manner. So news trading, how do we know when there is news, what time news will come out, and how to avoid them? That's why we also have platforms like Forex Factory. So forexfactory.com is a website where you can go just to check what is outlined for the Forex market for that day. So when you come to Forex Factory, this is January 3rd, last week Friday. Let's refresh. So yesterday was Wednesday, January 8th. So you can see there was news at 2:15. There was news at 8 p.m. In fact, there was news at 2 p.m., 2:15, 2:30, 4:30, 8 p.m. You can see that they are all USD. That's because I have filtered my currency to only show me news for certain currencies. These are the ones I trade. But when you go to Forex Factory fresh, it will show you a whole lot of currency news, there are different kind of impact news. We have low impact, we have medium, no, we have no impact. This is low, medium, and high impact. So high impact news is what you want to watch out for because those are the news that move with crazy volatility. And when it comes to news, basically, three kind of news are crazy and the most important. Number one is unemployment, which I think we had one today. Can you see? Unemployment claims, ADP non-farm employment, anything where you shall see employment, news for that day, the move will be crazy. So we have unemployment, we have CPI, we have FOMC, and I've forgotten the fourth one. So long story short is, before I enter the market every day, I come here to check, do we have news for the day? When we have news for the day, what that simply means is that I want to be careful. Do I want to enter the market before the news? If I see the opportunity to, I will. But as soon as the news is getting nearer, one of the things I want to do is to go and drag my stop loss to break even, because the movements during those periods can be crazy. Or I just want to closely monitor my trade. Because like I said, when you learn technical analysis very well, news most of the time will always favor you. Most of the time, it will always favor you. So that's fundamental analysis. We are saying that the same way we come and we analyze, because we still talk about how to now analyze the charts via technical analysis. So we are saying that just as we can come, one of the tools to analyze the market is what we call the trend line. And we can say that, oh, this is a trend line over here. Some people, this is technical. Some people don't do this. All they do is look at the country economy with another country economy, and they say that looking at the US dollar against the naira, dollar should gain strength. So what do? They convert their money to naira and then buy dollar. They don't need to come to the chart and be doing all these things. We are the ones who do them because we are trying to take advantage of intraday price movements. So most people who really do fundamental analysis mostly are usually the big guys. They invest over a long period of time. But our own, we are intraday traders just to take advantage of the daily fluctuations. But that does not mean that we don't pay attention to news over time, because there are long impact news like COVID. If you take advantage of COVID, all you can just do is sell. Sell, and you can sell for a long period of time. You get what I'm trying to say? So basically, that's fundamental analysis. Then we have sentimental analysis. Let's also check that, excuse me, before we don't talk about it. Sentimental analysis is a tool used in Forex trading to gauge the collective mood of traders towards a currency pair. So just like the word implies, sentimental, sentiment of pro traders, sentiment of hedge funds, sentiment of central banks. Sometimes it's old, but I don't use it either too. Because in the real sense, like I said, once you know technical, trust me, you are good. There's no form of analysis that you want to use that you won't chop loss. None. But you can be good to a point that your loss can be minimized. but that you won't chop loss. There's no how you want to do it though. I hope you get it. So sentimental analysis is that a group of pro traders can just come together and say that, okay, based on what we are looking at, this currency pair should go up. A good example of sentimental analysis is this forecast you can see. That's actually the work of sentimental analysts. Like before a news come out, they come together and say that, looking at the things we are seeing in the US economy, this and this and this, the US unemployment claim news that is coming out, we are projecting that 214,000 people will be unemployed. This is previous. This is the previous data. The last time that the news came out, this was the figure. Now, if they are projecting 214K, that's not good for the economy. Because if the last time 214K people were unemployed, if 211K people rather, I'm sorry, were unemployed. Now they are projecting that 214K people will be unemployed. That's bad news. That means that you can expect that the dollar will drop. But look at the actual that ended up coming out. 201. That's positive. What does that mean? 211,000 people were unemployed the last time the news for unemployment came out. But this time around, it has reduced to 201K. That is why you can see that this color is green. When any news comes out and the color is green, that means that it is good for the currency. And when any news comes out and it is red, that means that it is bad for the currency. In this situation now, everything has to do with the US dollar. So we can say that it's a mixed multitude of news, good and bad. So you may not see so much effect towards any direction as it were. But if everything were to be green, trust me, the US dollar will be going up. That's to let you know that this news that came out positive is having an effect on the charts. I hope I'm making sense to us. So sentimental analysis is that it is today that the gap is wide. Though. There are days that these forecasts, let me set this to, let's check for this week. And let's check something. All right. Okay. So these are all the news we've had so far this week. Forecasts. Traders came together and say what they were speculating. So can you see the previous was minus 0.2. They forecasted 0.3, which is a positive. And what was the response? What was the outcome? 0.4, not far from each other. So can you see that if we had followed the sentiment of the market before this news came out and you decided to buy the euro, you're on the good side. You get the idea. I'm trying to look for another example. All right, good. Look at this one too now. The previous outcome was 2.7. Sentiment was 2.7. And what was the outcome? 2.7. But all these things, what does make sense for you as an individual is to understand your technical. When you understand your technical, you will now be able to merge this with it. So in a day that the news for dollar comes out and the news is positive for the dollar, what will you do? You buy. And on the day that the news comes out and the news is positive, what do you try to look forward to do? You sell. That's just that. We are not going deeper into it now. We are just brushing it. There will be another tutorial on fundamental analysis on its own, technical analysis on its own, and of course, sentiment. I really don't do sentiment. I've never done it. I don't do it. I prefer to deal with the outcome of the markets or whatever I think the fundamental is saying. So that's it, guys. Those are the type of analysis we have in the Forex industry. Technical, which has to do with certain tools. Let's check it. They were trying to list some of those tools for us initially. Can you see some technical analysis tools include candlestick patterns, chart patterns, support and resistance level, and then indicators. So these are tools that you can apply to your charts, and with them, you can be able to predict the movement of price. So a good example is this trend line. I'm just trying to show us that as I round up. The rule of trend line theory is that when you see two pricing level that price has reacted from, the rule of trend line states that you can pick out your trend line tool and connect them and hope that in the future, when price comes back to touch that line, price will continue to the upside. So this is a good example. Take a look at this here. Price was here in the first place, touched it, moved up, came, touched it, move up again, came, touched it, and then move. And look at what happened here again. Touched it, and they did what? Move to the upside. So that's trend line trading strategy. Shey, this is for buy. Let us look for sales too. Look at what happened here. It is better this way. Great. So can you see that price was here? I'm sure you must have seen this on Baby Pips if you've read it thoroughly. But this is where we now get to practice. Yeah? Good. So the first time and second time, the first and second time, you will not always know that price will bounce. So you always need two price reaction before you can draw a trend line. But the rule of trend line states that now the third and fourth time that price will be coming to touch it, there is every probability that price will touch it and then continue in the direction that it was coming from. And as you can see, just as we had it over here, the price touched it the first two times, and then the third time went up, fourth time went up. Look at what happened here too. Third time came down, third time came down. That's technical analysis for you. And if you look at it very well, this is the weekly time frame. Are you saying that in all this week, news did not occur? News occurred. In fact, news occurs at least 3 times a week on every currency. But can you see that since we've gotten technical analysis right, even the news was moving in the direction of the technical analysis. So that's what I was trying to say earlier, that really, at the end of the day, what you want to learn to get right is your technical analysis. Once you've gotten it right, of course, as you grow, you can add fundamental and sentimental, but with technical, on a very great ground, you are good to go. So we've spoken about when you can trade the Forex market. And we talked about the fact that the market is always open 245 does not mean that you want to trade the markets all the time. You want to pay attention to the kind of assets that you are trading. Pay attention to the zones that they move the most, like GBP USD, that has to do with London. Let's check as many currencies as we can find. Euro USD. Eurozone don't have a specific time zone, but they also often move during London and New York. So GBP USD, that's London and Asian session. Meaning that when you go and check this asset, sometimes it moves mostly during London and Asia. USD JPY move mostly during New York and Asia. That doesn't mean that it doesn't move during the other session, but its movement is usually slower as compared to the time when the country where they spend that currency is in the markets. Do you get it? So that's about that, guys. We've come to the end of this module. Watch and watch again. Watch and watch again. The same way I did an example that, I brought out a chart. Let's check USD JPY just for more elaborate example. And, when you check, let us check yesterday, for example. Let's go to the 1 hour time frame. You can see that right from the Asian session, the market was moving massively all through the day. But if we were to be London, or New York, if it were to be GBP USD during the Asian session, you won't see any tangible move. Trust me, you won't see any tangible move at all. So that's the way it is, guys. You don't want to trade all the time. You want to pick an asset, maximum of 3 as a beginner, and look at when that asset move the most and time yourself to prepare yourself to trade at that point in time. So we've spoken about that. We've defined the kind of analysis that we do in the market, which is technical, fundamental, and sentimental. So the next we want to look at now will now be technical analysis. But until then, I look forward to seeing you at the other side. Cheers and God bless.